Welcome to the Mainstream Mortgages Podcast. My name's Peter Paley, and I'm here with my two business partners, Colton Boudreau and Derek Vandell. And today's topic is mortgages and divorce or separation. So I did, and now I'm done. Colton, what options are available if a couple decides to separate or divorce to their mortgage?
Yeah, so ultimately it's going to be up to both parties, which will have to be agreed upon, but either one individual can take the mortgage or you can sell the property.
And Derek, is it a simple process? Like how does one spouse take over the mortgage from the other?
Well, first of all, they're going to have to get qualified for that mortgage either on their own, or if they can't qualify on their own, they can always look for a co-signer, um, or put more towards the down payment to try to lower the mortgage amount if possible. But those are basically the options there.
And then if we're doing a spousal buyout and one's buying out the other, like what are the down payment requirements or what does a lender need to be able to process this transaction?
Colton?
I can answer that one. Yeah.
Yeah.
So typically it always comes down to a signed separation agreement, which will be determined with with the part like the two individuals and your lawyer. And basically whatever stated or outlined in that agreement has to go. So if there's any, debt payouts or buyouts or any amounts related to the mortgage, that'll be stated in the agreement and it'll have to be followed.
So Derek, Colton mentioned a lawyer, but we know that you don't need to use a lawyer for this agreement. What options can a couple go through if it's a really amicable separation?
Yeah, in an amicable separation situation, that's a mouthful. You can actually get like templated separation agreements and write them up, come to terms and agreements on, but just between each other. And then you can go to a notary or a lawyer to just have it notarized.
So it sounds like another big challenge here, Colton, is that clearly the couple had two incomes, and now one spouse wants to buy out the other. So we're going from two incomes to one income. So the chance of qualifying may be a lot lower. So what options are available to someone who is separating, wants to buy the house, but can't qualify on their own?
I would say the best course of action would be looking at a cosigner. Adding that second income always helps. Like you mentioned, it can be tough on just that one salary or the one income. So adding a family member to help you out and assist you during this time would be the best course of action.
Sure. And we already brought up separation agreements. And Derek, like what is the lender looking for in the separation agreement and how's it going to affect the mortgage application?
The lender usually wants to see, well, they'll always want to see whether there are support payments being made, either alimony or child support payments, because that will affect the calculation to see how much you qualify for your mortgage. So that's one thing. The other thing that the lender wants to see is how the assets are being divided. So normally in a separation agreement, there's going to be some buyout amount that goes a payout amount that goes to one party, and then the asset, like the house, goes to the other party. So once that's stipulated and agreed upon, it's written into the separation agreement, and the lender will be able to see very clearly, okay, this is how much they have, or this is how much they're getting, and this is how much they're paying, and so they can do all the calculations based on all of that. Also, I will just kind of mention what Colton, his last answer. I would just kind of add to that where another option that someone has if they don't quite qualify for the mortgage through the separation. When you are separating, you do qualify again as a first-time home buyer under the CRA's definition of what a first-time home buyer is, which means that you can use your RSP under the first-time homebuyer plan to increase the down payment and maybe qualify that way.
That's a really good point because everyone forgot
Mhm.
that definition. of a first-time
Mhm.
home buyer does change after a divorce or separation. So let's get back into the support payments a little bit, Colton. So what um how much of those support payments if receiving can we use? And what happens if you have to actually pay the support payments?
Yeah, so typically we can use 100%. If you're receiving the support payments, then it goes into your application as income. So it is helping your debt servicing ratios, and you can qualify for a little bit more. If you're paying the support payments, then it negatively impacts your buying power, right? Because we have to account for those that amount as honestly a
Yeah.
debt, to
Yeah.
be honest. So it's basically a subtraction on the income.
So we have a couple, they know that they're heading down this path towards a separation. What's the number one mistake that people make when they decide to separate?
With regards to
Derek.
the
Yeah.
yeah, with regards to the home or the mortgage or
Just
specific.
whatever you think the number one mistake is. Uh,
I would say the number one mistake that we see on our end anyway is that they think that they can kind of move ahead with everything without having a fully signed and notarized separation agreement. Chances are, I mean, 99.9% of the time, you do need to have that fully signed and notarized separation agreement. There are like very rare circumstances where you might not need it, but yeah, we don't even have to talk about those because it's not likely.
just as you were saying, that jogged my memory that I hope Colton can elaborate on. What happens with the existing mortgage before separation and all joint debts? What do people need to do? Colton.
So it's really going to depend what that separation agreement states, of course. So typically speaking, if there's joint debts and the mortgage, it gets paid out by whoever's taking over the home, I should say. Um, Again, it needs to be detailed in that separation agreement so a lender can clearly see what's happening and that those debts need to be included in the mortgage now. Um, just want to go back to your previous question. At a quick point is I would say make sure you contact a mortgage broker as us before going through the separation agreement, because maybe you go through it all, you sign it, and everything's in concrete, but you don't qualify for the house, and you're scrambling to find a co-signer or selling the home at the end, which you don't want. So I would say contact us first before signing those papers.
Great
Um,
point.
I wanted to sort of jump in with something there too, because I didn't quite get the answer I wanted out of there. But I also wanted to say if you are separating or someone has left the relationship, please do whatever you can to keep those mortgage payments current and all joint debts current. If you start missing payments, it doesn't matter if somebody's exited the relationship, you're still responsible, and it's going to negatively affect your credit score should you start missing payments. And if you start missing payments, the chances of you qualifying basically goes down to zero. So it's really important that in this uncomfortable stage of the separation or somebody's left, that those payments get made. And both parties really need to understand that because any joint debts will negatively affect your credit and could ruin your credit for years to come. So I think that's one of the most important things I think anyone should really consider if they're planning on going down this
Yeah,
road.
yeah. Being spiteful is not a good idea in this situation because it's
No,
like
it's
cutting off
not
your
the
nose
right
to
time
spite
for
your
this.
face. Yeah,
Be
exactly.
spiteful after. That's what I
Yeah.
say. Wait for this to settle, then be spiteful. Yeah. So I don't really have any more questions about this, but did anyone have anything to add that you thought I missed?
Um, no, I mean, just yeah, remember that you do qualify as a first-time home buyer again. That's a big deal. And yeah,
Consult us.
Colton, yeah, consult us.
Yeah,
Absolutely.
Yeah.
yeah, that's my
Call
main point.
Mainstream Mortgages if you're going through this. We have lots of experience helping people successfully separate and finding a new path. And there's a lot of things to consider. And please call us and please listen to what we have to say. So I'll wrap up this episode of Mainstream Mortgages podcast. And to contact us, you can call or text us at 431-482-2187. Send us an email at greatrates@mainstreammortgages.com or visit our website at mainstreammortgages.ca. Thanks for listening today and have a great day.
Bye.
Bye.